two important takeaways. But let's invite our market guest, Pawan Parakh, the founder of Renaissance Investment Managers, on the show now. Pawan, morning and thanks for joining in. I know Renaissance Investments has two key themes that you're betting on. One of them is the entire capital goods, and you jumped on that bandwagon pretty early on, right in the early stages of COVID, where you did see an investment capex cycle picking up. And the second one is the internet theme, which you believe is going to be very, very big in the next 2 decades. Is there a third theme, fourth theme? Can you tell us a little bit more about the big picture?
Right. Yeah, hi, good morning. So apart from industrials and digital, we are actually very positive on consumer discretionary space as well. We believe that as and when the economy actually grows and per capita income also grows, you will see a lot of these categories like branded apparel, footwear, jewellery, and a lot of these sectors are deeply underpenetrated as far as India is concerned. This also includes the like of QSR, retail, and a host of other things. And we think that this is a deeply underpenetrated category, and a lot of these companies, are having a proper strategy of having a brand laddering, wherein they have placed their products at the lower end of the band, mid-size, and the premium side. So this is one thing which we are extremely positive about. Apart from this, we've all recently been very positive on pharma and IT as well. We've increased our exposure in these two sectors as well. So yeah, broadly, this is how we position our portfolios.
Hi, Pawan. So just taking off from what Reema mentioned, that conversation was indeed heartening, because here's one company that's telling you that at least the pace of closures is now increasing. It's not gone back to normal levels at all, but at least it's better than the last few quarters. Since you're positive on IT, what would you buy into? Because the stocks have been fairly resilient in an environment where commentary is still weak.
Right. So in IT, our exposure is more on the big 4 or 5 names, and we are very selectively bought into 1 or 2 small names. Essentially, the thought process out here is that, one thing good about IT sector from an equity market standpoint is that before the result season, both in Q1 and Q2, we are actually starting with very muted level expectations, right? So the scope of disappointment is very low. Our interaction with a lot of these IT companies indicate that, at least from Q3, and if not Q3, maybe from Q4 onwards, a lot of these companies will start seeing traction. And in the intermittent, while the revenue traction is a little muted, a lot of these deals on the cost takeout side will continue to maintain momentum. In this kind of a scenario, I would want to believe that, it is better, at the beginning of this cycle, from a risk-reward perspective, it is better to be placed in large cap names. And as these themes actually gain a lot of ground, I would want to believe that a lot of these mid-cap stocks also will join the party, and that is when we should add a lot of this mid-cap IT names also. So that is how we're playing this IT sector for now.
Okay, got it. Pawan, thanks for joining us. What do you think about the entire auto space, and is there anything within that you still like? Because, a lot of the stocks have run up a lot already this year. So is there anything within the auto part that you would play, and, how would you do that? Is it the two-wheelers? Is it the standard CVs? Is it the EV play? Do you look at any of those?
Right. So within the auto side, if you see PVs have done well, CVs have done well, two-wheelers have been a laggard, and I would, our channel suggests that, starting this month, we are just around the end of the month, and from tomorrow onwards, we'll see a lot of these companies starting to report their monthly numbers. I would want to believe that a lot of these two-wheeler companies will start reporting good numbers. But we're not playing two-wheeler OEMs. We are playing the two-wheeler theme more through auto ancillary names, because we see that a lot of these companies, apart from being a play on the two-wheeler side, also have a decent, good new product pipeline, and they also have a decent presence in the aftermarket space. So typically, these are the auto ancillary companies which can grow their revenue at more than 10-15% versus typical 5 to 10% revenue growth that you would see for auto OEMs. On the valuation side, if you see, I think auto OEMs are fairly valued, whereas there's a lot of scope for re-rating in terms of valuations in auto ancillary space. So if you were to ask me at the top-down level, we are more positive on two-wheeler because that story is yet to play out, and we are playing it through the auto ancillary space.
Do you want to name some auto ancillaries which you like?
So we own Endurance Technologies, Varrock Engineering in our portfolio. We also recently added Excite into our portfolio.
Okay. Pawan, mid-caps have done really well and continue to do so, outperforming the benchmark. So incrementally going forward, Are you still comfortable deploying more to mid caps, or would you stick to large caps? And tell us about some themes as well. Some of the broader market themes that you think have momentum still left.
Right. So, I mean, given this shape of the economy, we are doing very well as far as the fundamentals of the economy is concerned. I am of the belief that starting from this Q3 onwards, we'll see a rural demand recovery also in the country. If that was to happen, and when you're in a bull market, safe to believe that mid caps will do better than small caps. Mid caps will do better than large caps. And in that kind of a scenario, it is always better to place in mid cap. In that scenario, if you see a lot of these sectors and themes that we discussed, be it the consumer discretionary space, industrial, these are all sectors dominated by mid cap and small cap names, right? So we are playing the same theme, but in the mid cap space.
All right, Pawan, we'll leave it at that today. Thank you very much for joining us and taking us through that quick check on the market and where you really see things from here on. We hope to have you back on the show soon, but for now, it's time for a break. When we come back, we're going to throw the